Welcome back. The market's doing fairly well. The sector that's not doing well today is the FMCG space, and that's led lower by, Hindustan Unilever. You pull up the intraday chart of something like a Dabur as well. Asian Paints. Across the board, there has been a decline. FMCG actually, from a sector standpoint, is the only sector which is in the red right now in an otherwise fairly green-looking screen. The only stock in the consumption space which is doing well is the one that, we spoke about just before going into break. That was Titan. Stock moved to the high point of trade. So how is this consumption space likely to pan out? What are the initial, findings from the ground when it comes to demand, etc., post GST, and what the outlook is for your FMCG portfolio? We do have Manoj Menon, who's the head of research, consumer analyst, expert at ICICI Securities, joining in. Manoj, before we speak about numbers and all of that and stuff, we'd like to wish you a happy birthday. I won't tell the viewers your age, but you're 25 with a few years of experience. Let's pull it that way.
Thank you, team, for that. I think there are better things to discuss, right? So we can move on to the stock.
Let's talk about that. GST, post GST, you've been doing a lot of ground checks, etc. What have your findings been, and is it actually growing as per what the management had been telling us at the end of the second quarter?
So 2-3 things actually. Before I jump into that, I want to tell you the sources, right? So my source of information is the listed companies, as well as a wide spectrum of unlisted FMCG companies who I speak with, right? The only context to note is many of these folks, happen to be over-indexed in urban, the unlisted FMCG, right? So that's my, source area. Now, broadly, we have found 3 things, right? Point number 1, particularly in the discretionary part of consumer staples or FMCG, the demand uptick is visible, right? Point number 1. Point number 2, it seems that consumers are very happy, right, with the absolute rupees being lower for large packs. Just give you an example. Let's say a 500 rupee shampoo bottle, which was the price earlier, the current price is 440, right, adjusting for discounts, etc. Now, the volume uptick seems to be fairly material there, right, because it suddenly, and also, by the way, the third point, what seems to be happening, particularly in a category like soaps, is that there seems to be premiumization happening to a Dove or a Fiamma, Devils, etc., from, let's say, the other brands. Because suddenly, certain price points has become, from a consumer perception point of view, has become very attractive. So there is genuine uptick in demand, the way we see, driving some premiumization as well.
So things are basically looking a lot better than what they were in the first half of this year. So right. Have you made any tweaks to your estimates for the third quarter, fourth quarter, and as a result of which, any investable ideas that you have?
We've not really made any changes. Whenever we we'll actually publish it first before we're talking. But having said that, if you actually look at the overall estimates for FY26, right, it was already baking in a certain recovery, right? And we had made some changes anyway at the time of the GST changes as well, right? If you ask me further, then answer is no, right? The bigger point actually, which we are very bullish, right, is that when I talk to people who has been in the industry for like 20, 30, 40 years, right, there are certain CEOs who actually just completed 40 years as well, right? I think one of the big insights what I'm getting is that this sort of bullishness what they have, because many of them has actually seen the 90s era, etc., when significant tax reductions was implemented and how actually it boosted demand. Or let's say when GST actually got implemented, which is not too far in the history, right, just 10 years back, right? How actually, or 8 years back, right? How demand got boosted. So there is a fair amount of optimism going into FY27 for price elasticity gains in certain parts of FMCG, not all of it.
Manoj, you were one of the first ones to have downgraded the paint space. You're the first ones to upgrade it as well at the time when there was extreme pessimism on the street with regards to the entire sector. Yeah. But now, as things stand, has the competitive intensity started to wane out? We spoke to Asian Paints. They also mentioned that now that the honeymoon period is over, the competition will start to feel the heat and so on. Yeah. Is that actually happening on the ground? Is the competitive intensity really waning? And that comes as a benefit for a large player like Asian Paints.
Point taken. Thanks for asking that actually, and thanks for highlighting the facts, here. Look, there are 3 aspects here, right? So the point number 1, is that the competitive intensity still remains very high. Yeah. I really don't think it has waned actually, right? And it is expected that it will get better, right? That's point number 1. Point number 2, I think what has also happened is that, Birla Opus has already done the, let's say, the initial groundwork of primary sales, right? So to that extent that, if you can call it disruption, that phase is behind us. Yeah. Point number 3, if you look at in paint industry over the last 20 years, we find an interesting pattern. 2005 to 15, right? Industry grew consistently every year double digits in value terms. Okay. Post 15, right? There is a pattern, right? We'll get into causality and correlation later. The pattern is that 2 bad years follows by 2 good years.
Okay.
Okay, and bad year defined as less than 5% industry growth, good year defined as more than 10% industry growth, right? For whatever it is worth it, FY25 and FY24 were poor years.
Poor years.
Right? So to that extent, there is a fair amount of optimism in the industry that things will get better. And if it does get better, which is a big if, right? The ability to absorb one more player's aspiration is easier. Right. So to that extent, competitive intensity can actually get better incrementally.
Got it.
Lastly speaking, in the last 6 months, particularly compared to the last 5 years, I think the number of paintable days were also lesser given the number of higher rainy days, etc. A lot of one-off sitting there, right? I mean, so we continue to be very bullish on paints. Asian Paints has run up, in the short term, but I think it needs to consolidate. But optimistic view doesn't really change. The second paint company which we like, apart from Asian, is Indigo Paints. The reason I'm highlighting because as a stock idea, which we have been recommending investors as well, is that Indigo Paints actually outperforms, whenever there is an enabling environment of industry growth.
Okay.
Right, because being a fifth large player, it's relatively easier for them to get a counter share higher than normal.
Yes.
During times of industry growth. Right, so I think it's an outperformer, in the business, and hence the stock, cheaper valuations, etc.
Right. We'll talk about that in just a bit, but I think we'll go back to Ritu. Ritu has a question.
Well, Manoj, I quickly wanted to ask, I mean, a lot of, tailwinds that you're highlighting from the GST price cuts, etc. But in terms of the headwinds, I think in your note, you talk about how there's been a lot of pantry loading on the back of this expected higher demand. How could that play out as, a risk because of what's happened already? And also, how are you pricing in the currency fluctuations, especially for some of these players that may be importing some of the raw materials?
Ritu, actually, I didn't think I couldn't hear the first part, but the second part on the currency fluctuations was audible to me. Look, I think the currency has kind of gone down, let's say high single digits, as we speak, right? I mean, I don't think it's material enough for any company to relook at pricing at this point in time because the commodity basket has not really behaved, in a way which would warrant a price increase at this point. Second most important point also to highlight is that, qualitatively speaking, I'll be surprised if any of the companies will implement a price increase for the next 3 to 6 months, given the fact that you have actually done a price cut, even though it is GST linked, etc. in the last 3 months. So I think in that sense, if there is let's say, put it this way, if there is a pressure on gross margins versus prioritizing volume, I would reckon the leaders would actually go for volumes, even at the cost of short-term profits.
All right, makes sense. Just a quick individual stock sort of question before we wrap up, because 3 leaders that we spoke with in the consumption space lately, you did speak about Asian Paints and the management commentary that we had from them as well. Spoke with Nestle recently, and we spoke with Titan. So on both Nestle as well as Titan, what are your thoughts?
We continue to like both of them. So they are, look, I think these are stocks or rather businesses. What do you make of the
management commentary?
Look, I think it's consistent. I would rather say consistent. Ajay has been consistently saying, that we are going to prioritize growth. And that's been my, let's say, learning from him, listening to him for the last 5 years now, right? Absolutely consistent. And I completely agree with that, right? And that too in an operating leverage business like retail, if you drive growth, everything falls into place, right? Yes. I think there's no debate whatsoever. And some of the good work, which actually Titan has done in the jewelry business the last couple of years, particularly under Ajay, is that they've actually reduced the gold price premium, relative to the relevant competitors, right? I mean, so I think that's another leg which is behind them. To that extent, faster growth expected, into the medium term, for Titan.
100 basis points margin given away for
reducing.
Is
absolutely.
That's good.
Yes,
and
absolutely.
Nestle?
Nestle, we are very bullish actually for a couple of reasons. One, there is a macro element also there, right? The last couple of years was fairly difficult, I would say, for urban consumption, right? Rural has started outperforming. And if you extrapolate the current situation of good GDP growth and cooling inflation, I don't want to use the word Goldilocks, but it's somewhere there, right? Closer there, right? I think urban consumption making a comeback is a matter of time. It's not about why, it's about when, right? And Nestle is, absolutely square, in terms of getting that benefit, right? Point number 2, very, very important to appreciate, right? Nestle actually has got certain categories like chocolates, which is truly discretionary and impulse within FMCG.
Yes.
Right, and it has actually seen an 18% to 5% reduction. Or in a category like Maggi, at a 5% taxation today, let's say biscuits will benefit, a Maggi will benefit because, there is no incentive for an informal player to not be formal at a 5% taxation, right? So Nestle is a benefit of tailwinds. Apart from the management change, we expect to bring in its own sets of new energy and new direction, etc.
And just before we let you go, we do have time for about 30 seconds. Honasa, the acquisition that they've made, of Reginald Men, and the overall consumption environment in that, the stock is about 30-40 rupees away from its
IPO price.
IPO price itself.
Yeah. Look, I think let me address the M&A part first and come to our fundamental view immediately after that. I think it's a good acquisition, right? If you actually look at the brand, 70% is actually D2C.
Yes.
So many of the so-called D2C brands are not necessarily D2C, right? It goes through the platforms. Second point is most of the revenues actually come from South in vernacular language communication. Right? I think this brand, it appears upfront that I think has built up something which is scalable. And second point is that Honasa, which is obviously quote unquote, if I can use the word, to be the L'Oreal of India into the future, right? I think they're clearly building a bouquet of brands, and this kind of fits well with it. Point number 3, our bullishness on Honasa essentially stems from just 2 aspects, right? One, in our opinion, Mamaearth is back to growth. And if I crystal ball gaze into FY27, Mamaearth actually getting back to double-digit growth is let's say a high probability in our opinion. Point number 2, couple of other brands, which is Dermaco and Aqualogica, also seems to be pushing the barrier of going beyond 600 crore ARR.
Pleasure having you today, Manoj. Thank you so much for sparing time and joining us for this very insightful conversation. Manoj Menon there on the entire consumption space. Take a short break. More on the markets on the other side. Stay tuned.
26 years of CNBC-TV18